don't compare yourself to other traders. I think that's probably the first and foremost thing, is because I think a lot of traders that come in there, they just see other traders online getting these massive payouts, but they actually don't know they could have spent $10,000 to get that $10,000 withdrawal. Right? Focus on your own trading, your own,
So if you're trading a strategy like me, right, you really have to account for that. The lower your win rate, the more higher your RR is, the more you have to just accept the fact that you are going to go on losing streaks. Right? This is not a small sample size anymore. I'm like 30 trades in. I'm 30 trades in. This is not a small sample size. I'm like losing over 30 trades, right? Potentially 40. And you just have to be prepared for that. What's happening, guys? Welcome back to another episode of the Challenge Accepted podcast. And today's episode is going to be something special because I think in the previous episodes, we mentioned that James is now a funded trader with Hydra Funding, and he's been trading his funded account for quite a while. We're going to dive into the numbers and statistics. If you guys haven't watched the previous episodes, what we discussed was an entire strategic plan on how James approaches the challenge phase, even phase 1, phase 2, and then how he's going to approach his funded phase, which is very different, right? So we're going to go into the exact strategy behind how he's deploying risk management. We're going to go into why he's doing these things, and we're going to go into how he plans on growing, scaling, and keeping his funded account alive so that he can make as much profit as possible moving forward. So we're going to get straight into it without wasting any time today. James, how's it been trading your funded account so far, and how has your strategy or maybe your risk management differed? Let's start there.
Yeah, no, it's obviously always great to be on with the podcast with you, Diwa. But yeah, it's been really cool. I had the account now for just over 2 weeks. Yeah, 3 weeks actually, 2-3 weeks. And as you guys know, I passed phase 1. This is the first 2-step account that I took with Hydra. I did a bunch of 1-steps that I failed. I think it was like 3 or 4. And then I did somewhere around there. And then I did the first 2-step, and that was in December. Passed phase 1 in beginning of Jan. Was really actually, I took a big break. I mean, I think I only took like 5 trading days in December anyway. And then I passed, which I got videos, by the way, on my YouTube channel. So I'll put the link below as well. But I got some of those videos on my YouTube channel, so make sure to go check them out. I walked through the phase 1, 2, and 2 all in one go. And then I literally got, I think first week of Jan, I got the account. And by the way, Hydra it's really amazing. You pass phase 1, I literally got my phase 2 credentials within 1 minute. And then I passed phase 2 in 5 trading days from Monday to a Friday. And then I literally got my live funded account credentials within a minute. And then the live account was enabled 5 hours later or 4 hours later, something like that. So that was pretty cool. So yeah, it's been really, really neat. I think I'm kind of seeing us as mentioned. I know we're working together, Hydra and myself and Diwa and myself. But I'm also seeing myself as working long-term in terms of a trader as well. I'm not just coming here on my live accounts looking to punt personally. I've got some plans for that I want to do for the account. I'm looking to stick to them. So we're going to speak about that and we can actually get right into it. So let me start sharing my screen here and then we can chat. So we can put us here on the right-hand side here. Where you can see here's my live account. You can see here's my 50K Hydra Funding account. And you can actually see over here, I'm up 1,308.2, and you can see that matches up over there. Just for the skunks that will say that I'm talking nonsense. So I've input these numbers myself. You always get those guys. But anyway, I can actually at the moment, at this current time, I can take out almost $1,000 from it if I would like, which is literally only from 13 days. Yeah, 2 weeks of 3.5 weeks of trading, which is, really, really nice on a 50K account. So I'm currently doing a 100K challenge as well, which I'm currently up on at the minute. But yeah, just the reason why I'm not taking this out is simple. Is because when you take the first withdrawal out from Hydra, the balance sets in at the starting, the balance locks in at the drawdown locks in at the starting balance. So my plan for this is to get the account to 60K, take out a 5K withdrawal, and then anything over that 5K buffer that I can actually still withdraw if I would like, but I'm going to take withdrawals from that maybe monthly. So I'm seeing this kind of like a long-term thing, that's what so I want to make essentially 20% on this account before looking to take a withdrawal.
And that's how we encourage traders to manage their own risk. That's why we have this rule in the first place. You can choose to withdraw as much of your profits as you want, anytime you want for the first withdrawal. It's completely up to you. right? So if you really want to just like make big profits and you're okay with like taking it out and then maybe potentially risking losing the funded account, you can do that. If you'd like to be more patient like James, right? Scale up the account, build up a buffer, and then potentially, like just like James, he's doing another 100K challenge, right, which he can then use to scale the account. So let's say if James passes also the 100K challenge and he wants to continue trading this 50K, at Hydra, we actually allow the merging of accounts. So he can put in a request to our support, say, hey guys, like I have 2 funded accounts. I haven't taken a withdrawal in either one. I would like to merge the accounts. So we can then merge those 2 accounts so that he would have 150K total capital that he's trading on one account. So it's really up to the trader. We allow for as much flexibility as we possibly can. And today's episode, I would really like to dive into some of these, trade approaches from James as we're talking about him looking to scale up. He's not just looking to do 50K of capital, right? He wants to accumulate more capital. Obviously, when you're making percentage-based returns, the more capital you have, the more money you end up making trading the exact same strategy. So I'd like to get into the numbers a little bit. And the first thing I've noticed about these numbers, what are we at? 60 trades so far on the month? Is that
Total
trades?
total trades.
Oh,
Yeah, 60 trades. 61.
yeah, 61 trades. We're used to seeing James, with a pretty high win rate, anywhere from 65 to 70+%. We're back to seeing his regular style, slightly lower RR, right, at 0.8,
Yeah.
just under 1 RR, but with a very high win rate. Of course, very, very consistent performance when you have a win rate as high as James. Why don't you take us through a little bit and start with the risk management side? What are you doing differently here? Are you, for the viewers that didn't catch the last episodes, James during his challenge was risking anywhere from, in phase 1, 2 to 3% per trade, and then in phase 2 started to scale that back a little bit, 1 to 2%, and now we're in the live stage. How much are you risking? How's that changed for you?
Yeah, so you can actually see back to kind of like my normal stats. Well, where I would say I'm more in line with about, 65% plus win rate at about a 0.8 to anyway to 1.2 risk reward ratio. Normally is what you can see is in line with that. So I'm risking anywhere from 0.5 to 1.5% of my trades. Sometimes, 0.5 to sometimes even less. 0.25, call it 0.25 to 1%. That's kind of like my range at the moment. So you can see my average winning trade is actually $80 and my average losing trade $99. But if I just come here to my report section, let's just actually see something that I'm more interested in is my average winning day to average losing day. Because sometimes trades can be like, I can be like in a trade and I can actually say, I don't like it. And then I pull it and it's not, that trade can count as, something like that. My average winning day over here is $321 and my average losing day is $315. So that's about 1-to-1, call it.
Yep.
You can see my average month at the moment is $1,000 and this is a 50K account. So that's just under 3%. I've only really been trading for 2.5 weeks. Average hold time, 3 hours. Okay, I think definitely something that on this fund account that I picked up is I have not been cutting my losses early enough. You can see my average hold time on my losing trades is actually longer, 8 hours compared to 2 hours. So that's definitely something that I probably is affecting that RR, which was, obviously I went on quite a heater to get that over the line. So that is definitely a work on for me. But interesting, Mondays and Wednesdays I'm down on, but Thursdays, Fridays, and Tuesdays I'm up on. And then just actually to come to my instrument, I've actually been trading the yen crosses very, very nicely, as well as a little bit of Bitcoin on this account, if I'm not mistaken. Yeah, Bitcoin I'm up, and Euro JPY and then the NASDAQ. So, yeah.
Welcome back to currencies.
Yeah.
So, with this approach, right, I want to dive a little bit deeper into you risking 0.25. You said 0.25 to 0.5% per trade here.
Yep.
For any of you viewers who are watching this right now, you're thinking, wow, that's so low. That's not actually very low. If you ever kind of like run any type of Monte Carlo analysis, like the chances of you losing 10 trades in a row within a sample size of, let's say, 1,000 trades is actually relatively high. Even if your win rate is higher, like James, you're used to seeing 60, 70%, maybe your loss chances of a 10 loss streak are lower. But if you're like me, where you're used to seeing sub 40% win rate, I'm like prepared for a 10 loss streak all the time. I'm like, yo, if I lose 7 in a row, this should be no surprise to me, right?
Yeah.
And my risk management with, even within, the challenge parameters, I'm risking zero point 0.3, right? Like
Sure.
currently risking 0.3, and I would only scale that up if the account is in profits. Currently, my two-phase 200K challenge is in drawdown a little bit, and I'm in drawdown overall for the month of January. I'm down about just over 2%, maybe 2 and 2.2 or something like that for the month. And yeah, my stats have not been great. I mean, this happens, right? So I can even go into my TradeZilla here, just so you guys understand. I'm not let's share this tab. Let me
Yeah.
just get logged in. Yeah, I want to show this because I want to show that like you can have a really, really bad month. Um, you know, and which is what I'm having right now. Like I'm having a pretty bad month. Let me just remove this, and I just want to do the two-phase just on my two-phase account. Okay, so this is my stats on my Hydra two-phase. I'm in phase 2 right now, and you'll see that overall I've lost 19 trades. I've had 5 break evens and I've had 5 winners on the month, which, with a 20% win rate, it's pretty low for me. I'm used to seeing just sub 40. So I'm used to, on average, being 38, 39% win rate is where I'm used to seeing. Let me see, is it correct for this month? Numbers are a little bit off. Yeah, this looks more right. So 17% win rate on the month. I'm down almost 2.5%. And you need to be prepared for this. I'll just like run you guys through, because I don't want this channel to just be about showing, oh, like, we're doing great. This is how my month has been.
Oh,
This
well,
December.
you are they,
Ignore
if they
December, right?
if
December I
they
was on
think that
heater.
if they think that it's only us showing how great you are now that I've got the funded account, they need to go watch the previous accounts where I was blowing left, right, and
Yeah.
center.
Exactly. Like I want to show we want to show the good, bad, and the ugly, right? So we've shown, James's stats, and I want to show you guys what it looks like for a bad month for me, right? If we look at the dates here, I started off on the 1st of January, not the 1st, the 6th of January, I took my first trade. I was still getting back in the swing of things. But you'll see how much red there's been in the month of January for me. I started off the year 1, 2, 3, 4, 5, 6, 7 losses in a row before my first win. Okay. And then I went on to take another 3 losses in a row before my next win. Things started to climb back a little bit, taking some break even, some wins. And then, again, in the past week, in the past trading week, I've taken 1, 2, 3, 4, 5 losses in a row, right? This is something that I'm used to seeing and I'm prepared to see, given that I trade a higher RR, higher RR, lower win rate strategy. My average RR is more than 2.5, as you can see over here, right? 2.65. I'm trying to push that. Actually, I think I can get that up this year while maintaining a very similar win rate. We will see probably by the end of the year whether I'm able to actually achieve that or not. But I'm prepared for this volatility. So when I trade my challenges, I understand that losing 7 trades in a row, 5 trades in a row, even 10 trades, 12 trades in a row is a distinct possibility. It's not even just the possibility, it's a likelihood. If I've taken 1,000 trades, I understand the math behind it. I understand the Monte Carlo simulations behind it. I'm going to experience a 10 loss streak almost guaranteed this year. And I still haven't even experienced that yet. My max loss streak was a 7 so far. Right. So with that kind of mindset and that kind of approach, understanding my numbers and how likely I am to draw down the account, I'm only risking 0.3 to 0.4% because a 10 loss streak would put me at about 3% to 4% drawdown, right? Which is still very, very safe within the parameters of a two-phase account. If I'm starting that from a 9% drawdown perspective, I would only be drawing down the account half. And I like that as a psychological perspective, right? I like that. Okay, cool. I'm having a terrible month so far. And I look at the P&L and I look at the dollar sign. I'm like, I'm actually only down to not even 2.5% on the month.
Yeah,
That
the
feels
bigger
okay.
your account, the more money it's gonna be, right?
Correct. Right. So I'm not too bothered. I'm like, cool, I'm down 2.5%. This is very, very easy for me to make back, especially seeing as even right now I have some open positions. It doesn't show you my open position. Oh, maybe you can see the open positions here. I have some open positions here. Some of them are running in profit, right? So my equity is not like this. My equity is
Yeeks, CAD CHF. When last time I traded CAD CHF.
I'm the currency king, bro. Mr. Worldwide is what they call me. You can see my open positions, right? Like I have CAD CHF, EuroCAD, UJ, GBP CAD, GU. I monitor a lot of different pairs. So I have a lot of open positions. Most of these are actually running in profit. So we'll see if they eventually get to the take profit. A lot of these could end up just being break evens, or some of them even losses. I don't know where these are going to go, but I'm fully prepared. Why I want to show the numbers is because I want to show you guys what a really bad month looks like for me. But at the same time, I understand that, like, if out of these, even these 3 open positions, if 2 of them are winners and then the rest are losers, I'm still going to be making a lot of ground back because my RR is so high. I think a few of these positions, the take profits at 3.2 to 3.5 RR net. So I'm going to net 3.2 to 3.5 if some of these play out, but my minimum RR is 2.5. So it's very, very easy for me to climb out of drawdown. But what I tend to experience is more volatility, right? Because my winners are big and my losers are small, but I tend to go on loss streaks more often. So I could be like 5, 7 losses in a row, used to seeing that. But when if I win 3 trades in a row, that's going to like make up for all of that plus more. So I will experience a much rougher equity curve than someone like James that's a lot more consistent on the win rate side. So if you're trading a strategy like me, right, you really have to account for that. The lower your win rate, the more higher your RR is, the more you have to just accept the fact that you are going to go on losing streaks. Right? And this is not a small sample size anymore. This 19, 5, 4. So what? I'm like 40 trades in.
Yep.
30.
Yeah.
30 trades in. I'm 30 trades in. I still have open positions. I'll probably end the month closer to 40 trades because we still got today and tomorrow, right? Some of these won't play out, but this is not a small sample size. I'm like losing over 30 trades, right? Potentially 40. And you just have to be prepared for it. I just want you guys to take everything with a pinch of salt, because some of you guys are, in 10 trades and you're in a loss streak and you're like, oh, I got to change the system. Something's wrong. No, bro, I'm trading the exact same way. And hopefully next month I'll be able to show you guys, when I have a better month, what that looks like, how the numbers all balance out. Like, I really, really want to just be able to give you guys an accurate picture. So even with that, even with James's more consistent equity curve, you can see that he's taking the approach to risk 0.25, 0.3% per trade, right? Like, he's really looking to play this cautious because we're talking real money now. When you lose in a live account, it's not just like, oh, I'm buying the challenge. Like, you got to redo the whole thing all over again. Nobody wants to do that, right? So I want to talk about how to keep a funded account alive. I think that's not something that a lot of people take that approach of. Everyone gets to the funded account, they're like, the greed kicks in. I want to make a big payout. I got 100K to work with now, like da da da. If anything, you see what a professional is doing. He's gone the opposite route, which is high risk when it's easy to reset, right? And then phase 2, lower risk. And then now the funded account, he's even more cautious and more careful because he knows that his edge is going to play out long term. So my question to you, James, maybe we can stop looking at my ugly red month now. We can Rex looking at my face. I think it looks a little bit better. Or maybe your stats. There we go. That's nice. This gives me less lying. My question to you, James, is do you have advice for our viewers, who have, and I'm sure a lot of you have experienced this, gone to the funded stage, blew up a funded account? Because we know that the average funded account, statistically speaking, you cannot debate this, lasts only 22 days. All right. That's the statistic. No, like, the average guy cannot keep his funded account longer than 22 days. Do you have advice for the viewers out there that want to practice a more long-term approach, want to maybe look to scale up, right? Like, not just like, oh, 50K account, blow it, do another one. Maybe like what you're doing, do 100K, maybe merge that, maybe do another 100K, maybe merge that and look to accumulate that capital. Maybe give the viewers out there who want to do that some advice. Like, how should they approach the funded stage, and what are the top things they should be looking to do?
Yeah, honestly, I think the first thing I would say is don't compare yourself to other traders. I think that's probably the first and foremost thing, is because I think a lot of traders that come in there, they just see other traders online getting these massive payouts, but they actually don't know they could have spent $10,000 to get that $10,000 withdrawal, right? And they don't know how much, so I think the first thing is don't compare yourself to others. Focus on your own trading, your own, and I think the big thing is, like, if I mean, I work with traders every single day in our private mentorship, with ASFX and the Black Shirt Club. When I always pitch it to someone like this, I said, if you came into the Black Shirt Club at our private mentorship, you're already working a job that is covering the bills and everything like that. If you can come in and you can make an extra $2,000 a month from a 100K funded account, would you be satisfied? James, that would change my life. That's what they say. That's what a lot of traders say to me. James, that would be fantastic. So why do you want to come in and all of a sudden start punting and you haven't even made your first $500 in a month and all of a sudden you want to start making $10,000 a month? Yes, that's a good goal. And I got into trading to create generational wealth. And most traders do. But if you are of a standpoint that you've never even had a $1,000 month, what makes you think you're all of a sudden just jump to 10,000? Just slow it down, take it slow and steady. And as I said, I've been trading this for 2.5 weeks. I'm already can take $1,000 out of here, which obviously I'm not going to do as explained. But you can grow this for the whole year. Let's just say you trade this for 6 months. You focus on 6 months of trading at a time, and you can take out $5,000 to $10,000 on a 50K account. Let's just say you double that, you get a 100K account. You can take $10,000 to $15,000 every 6 months extra on top of anything else that you're doing, in terms of work-wise for the viewers watching. Because most people are not trading full-time. That's just the reality. And I think it's also an illusion. I don't only make money from my trading, so neither should you. In my opinion, I did that for a year and a half, and it was kind of torture at sometimes because you're only relying on that. So I think don't just get a funded account and expect to just go into full-time, because to slow it down, take what you can and continue to, be slow and steady in that. And you'll probably find yourself doing a lot better and taking really, really nice money out of the markets. So that's my advice.
Yeah, I think that's phenomenal advice, right? Practicing patience. I think trading in general is a game that forces you to practice patience. And sometimes I feel like, in the prop industry, in the prop game, when you suddenly get access to a large amount of capital and you're able to make tons of profit, you let that get to your head. And my advice to all the traders out there, after having run Hydra for like almost 3 years now, is stay away from, this kind of like short-term greed mindset. Go look into the power of compounding, right? The power of compounding is how you make tons and tons of money as a trader. And when you look at compounding over the long run, that's really how generational wealth, as James said, is made, right? If you're able to compound your percentage gains over time, that's how you're going to end up making a lot of money. But that doesn't happen over the course of a month. That happens over the course of 5, 10, 20 years of consistency, instead of just setting the short-term goal of, I'm going to get this 100K. I'm not trying to make 10K, right? Like, if I blow it, I blow it. Think about the long run of how can I grow my capital? How can I continue to make percentage gains? And how can I scale it up? Speaking of which, Hydra Funding, if you guys don't know, we have introduced a scaling plan. So I want to run you guys through the scaling plan because this is very, very new for us. And this is kind of something that that traditional prop firms, or if you're working for, a brick and mortar firm, or maybe even a hedge fund, this is how they would evaluate your performance. In the previous episode, we had our good friend Dylan Maltman on talking about how he runs his hedge fund. Such an interesting episode. Definitely encourage you to, take a look. We'll include the link to that episode below. Very interesting episode about hedge funds. This is a very similar approach that we've taken. We want our traders to be able to demonstrate that they can generate consistent profits while managing risk. We don't specifically mention the Kelmar ratio here, but this is something that we do take into account here. This is more how a hedge fund would evaluate their traders, right? So we will double your account size up to a maximum of $5 million. All right, that's the new cap at Hydra, which is your account can grow. We will double it up to $5 million when the following criteria is met. I would just run you guys quickly through this. On your funded account, you must have at least processed a withdrawal. So you must have made a withdrawal, and you have to demonstrate 6 consecutive months where your maximum drawdown does not exceed 4%. Now, this is very, very tight, right? If you remember in the last episode, Dylan was talking about in the hedge fund space, in the real professional trading leagues, it's not just about how many percent you can take. We went into talking about the Kelmar ratio, which is how much you draw down the account, right, to generate the profit that you generate. So we care about both sides of the coin here. You cannot draw down the account by more than 4% in 6 consecutive months. And within those 6 months, at least 3 months where the gain on the account is more than 3%. All right. So in a 6-month trading window, you have to consistently generate 3% of profits without drawing down the account by more than 4%, which is relatively consistent trading performance is what we're looking for. We're not looking for you to generate the most returns. right? Like we care about you playing within the boundaries and the rules for us to give you more capital, right? And the gain of the account has to be at least more than 10% since
Sure.
inception. So if you meet these criteria, if you meet these requirements, you can apply to us and we will double your account size up to a maximum of $5 million. So if at the time you qualify for this, you have $1 million under management, we would double that to $2 million. And then if you're able to double that again, obviously, the ladder goes up. So that's something that we've introduced. It's at no cost to any trader. We want to see someone come in, show the consistency. Who knows, maybe James is going to be the first one to do that, but show the consistency, demonstrate that they can day in and day out over the period of half a year at least, show that they can consistently get profits without drawing down the account massively. This is the opposite end of the spectrum to the average funded trader. As you know, 22 days, that's how long it lasts. They don't even get 6 months. Like even getting 6 months, just keeping the account alive is probably very unlikely for the average quote unquote funded trader. And we have all these gurus out here. I got funded. Like I'm taking this payout. It doesn't really mean anything. Like they can show you the payout certificates, but they're just blowing up accounts all the time, or they're just like buying a new account every time, risking 3-4% on a one phase, get to pass, try to punt. That's not really a sustainable way to trading. Maybe you can squeeze some money out of prop firms, trading like this, but no hedge fund's ever going to want to work with you. This is really not how a professional trading career is created, and you're not going to be able to scale your wealth. You want to build generational wealth. You want to create generational wealth. You're not going to be able to do this trying to flip accounts for, 3-5K profit and then blowing. It's just not happening. Right. So that's one of the cool things that we've now introduced at Hydra Funding is the scaling plan. For those of you, it has been a request for quite a while. We have looked into it, and this is the decision starting from this year. We're starting to offer this. So I'm very excited about us offering the scaling plan. And I'm also very excited about James joining our funded trading team. It's been a long time coming. And I know that like last year he was trying again and again, and I'm very proud of him for having finally made it. We've gone through so much in detail and in depth around his trading journey with Hydra. And I'm very excited for us this year to be able to demonstrate some of the capabilities that we have and the priorities that we have placed upon, payouts, upon great trading environments, and great executions. I think all of these are going to come into play now that there's live money on the line. And I'm very excited to see what James is able to do with this funded account. And with the other 100K, you want to just quickly, before we sign off, run through the 100K, the challenge? So James is on another 100K 2 phase. And honestly, I think this is the smart way to do it. Pass your funded account, go do the next one. Start to scale up your capital, right? So if James passes this one, he will now have 150K AUM with Hydra Funding. We allow the merging of accounts if you want that. So James, why don't you take us through a little bit on?
Yeah, so I literally just started this account last week, Friday. I actually had a nice little trade on, I think it was GCAD or ECAD on there. But yeah, up 0.57%. The 100K account's a lot easier to calculate the percentage gain or loss. But yeah, again, literally started. I've only taken 11 trades on this. My RR still very, very small sample size, but currently I was up highest 0.8%. So currently up on the account. So yeah, I think I took a loss over here on some yen crosses over here, if I'm not mistaken. Yeah, yen crosses over there. So as you can see, I'm not really scalping again. Longer trades.
Yeah.
And then I think I had some Bitcoin and some. I think it was also some yen crosses, Eurocad, sorry, Bitcoin and Eurocad.
James changed his ways, bro.
There we go. 2 minutes. Yeah, exactly. So no, I'm gonna look to pass this, and yeah, to definitely 2 minute James is the more like intraday swing type style has definitely been working better for me. And also, obviously, I'm gonna have my my son's born next week, so it's been a lot better in terms of my trading as well. I don't need to be watching every single tick in the market. I can actually I can actually look at growing very, very nicely. I was actually doing a comparison the last couple of on my personal account in terms of the commissions that I'm paying. When I'm actually swing trading, is a lot less commissions as well. Obviously I'm paying real money commissions in that because I'm trading my own capital. So that does make a big difference. So yeah, we'll see what happens. We'll keep you guys updated. If you want to stay updated, this is the place to do it. Hydra Funding podcast, the Challenge Accepted podcast, and then as well as on my socials, I always put through stuff. Great, stuff going through all depth of these accounts and how I'm doing it. And then hopefully by June, we'll get that 50K account to a nice buffer, take a payout, and then hopefully maybe get another 100K, another 50Ks over the line as well then too. And we'll take it from there. But yeah, it's exciting times.
Love to see it. You know, I wanted to just take this episode to congratulate James and really dive into the numbers because it really has been a long time coming. And yeah, very excited to see what you do with the funded account and your upcoming challenges, where you get to in terms of scaling your funded capital with us. And we hope that this episode has been insightful for you guys. And I hope to see many more of you on our funded trading team in the upcoming year. Hope you've enjoyed this. We'll catch you in the next episode. Peace.